Hey traders, John Howell here, and in this video I'm going to be covering why there's a caution with silver and gold, but especially gold right now. For you FOMO guys out there, do not be FOMOing into gold right now. I'm going to be telling you the reason why. And also we're looking at silver and gold, we're looking at the GDX, the GDXJ, what's happening through there when it comes to that. I also got a target where I think the GDXJ is going to get to, so I'm really excited to share that with you. Also going to share with you why I believe the S&P, the overall stock market, is going to just keep breaking up to all-time new highs and keep going up for a little while more longer as well. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Let's actually first start off with the, man, I can't talk this morning. With the indices. The first thing I want to talk to you about when it comes to the indices itself is that we're starting to create a higher low in the Dow Jones. Now, what does that mean? In a markets, the most important part to us is an upward trend. So as we can see, we have this point through here, which is a higher low. We have this point through here, which is a higher low. We have sort of an equal low through here. Markets come back down and now we're starting to move up. So now we're creating another higher low. So we are still in a very nice upward trend through here on the Dow Jones. And so I wouldn't be too surprised if we did start to break out of this level through here. And then we started to break up and out to continue this upward move with the Dow Jones. Because the trend is your friend until it doesn't become the trend anymore. So looking at that, now looking at the S&P 500, one of the big reasons why, or technically, let's have a look at through here. So technically we can see that we have a higher low through here. We have another higher low through this point through here. We have another higher low this point through here. Market runs up, comes back down, another small little higher low, and we'll continue to break up above these high points right here. So we can see we're continuing this nice upward trend that we've been in for quite some time, and we haven't started to reverse. Now, what would a reversal look like? A reversal would look like that we would actually stop here, come back down, and break these lows through here. That would be the sign that this could be some sort of short-term topping pattern, and then we could see something at least like that on the S&P 500. But we're not getting that. And we can see that that's what's happening through there. And also the Nasdaq. Let's move over to the Nasdaq. The Nasdaq, as you can see, has continued to be in a steaming run to the upside. And this is why we never want to try to pick tops or try to pick excuse me, try to pick tops or try to pick bottoms, because it's always likely to be the worst thing. Look at this here. We have a higher low. We have a higher low. We have a higher low. And we have a higher low through here. And now guess what? We're breaking up again above new highs on the Nasdaq. And this is where we're hearing a lot of bubble talk. Oh, market's overvalued and market can't keep going up and market can't keep doing this. And the economy's bad and how's the stock market going up and how's this and how's that and all this sort of things. So we can see what's happening through there. So when we're looking at, say, something like the S&P 500, the S&P 500, this point up through here is the high point. This is the previous highs. To me, I truly believe that we are likely to continue moving up and breaking those highs. Now, why do I say that? The Fed is likely to come out with another stimulus bill. In fact, it's almost 100% certain that they're going to come out with another stimulus bill. So if that's the case, we know we know part of that stimulus bill is going to be throwing more money at these markets to put even, what do they call it? The Fed put. And this market's likely to continue moving up and continue breaking up to all-time new highs and continue going from there. It completely shocks me as well too, guys. But I don't make the rules. I follow the Fed put, but I also follow the markets more. And the markets have continued to be in a very nice upward trend ever since. So the Fed is probably going to create even more liquidity into these markets or push these markets up even more. And new highs is probably just around the corner when it comes to the stock market, which is just absolutely incredible. Now, I did trade the SPY, by the way, guys. Okay, on the crash, I traded the SPY. When the market came down through here, I think I traded it around here. I bought some I bought some call options. The market dropped. They were in losing positions. And then down here, I bought some more call options. As the market ran up, these were in a losing position. I made money here, but I still made about 70% return on my money. And that's where I got out through here. So the reason why I'm telling you that is I didn't know the market was going to keep going up to almost all-time new highs on the SPY. I had no idea about that. So that's what we can see what's happening in the markets, and we can just continuing to slowly move in that direction. So let's go have a look at silver and gold right now. So let's silver and gold. Gold, as we speak, is a massive caution. And get ready for some sort of reversal. We will get a reversal here, guys. Yes, we're going through a big bull market, but in any time we start to get this, especially what's happening here right now, and we're starting to get a very nice, especially this hourly chart, you can see this hourly chart's definitely making a very nice move to the upside. Then what we're seeing here is, to me, is a final little, probably a final move to the upside. If I go to my GLD, notice how we've had this massive, we had a bit of a spike up, and now we're getting a massive sort of volume spike coming in. That tells me there's a massive caution here, guys, and no FOMO into the markets. This is a wrong time to be getting into the markets. It's not a, there's no probability. There's more probability of it having some form of a pullback to create some sort of equilibrium first before that. So silver and gold is giving a massive, or should I say gold right now, is giving a massive caution to the FOMO was out there. Really is. Now, when we're looking at silver, sorry, no, that was gold. When we're looking at silver is actually different. Silver is, yes, we had a big move up and we get a bit of a sideways move, but silver has just continued to rally up, and it actually hit my projected target, which was that level through there. That's the reason why that level's through there. But silver on the weekly charts, we can see that silver right now is just right at this level through here. I would love to see a pullback in silver. I would absolutely love to see that in silver. It already got to my first target, which is up here, which is just a simple projected target that I used. You can see my line from the breakout to up here, and that's where the market's likely to run to. So it's already got to there. We're probably likely to continue up on the daily charts, but I would love to see even more of a pullback first, and then a move to the upside. So, but silver is just continuing to move up. Gold, bit of a cautionary tale there. Again, I wouldn't be too surprised if we did start to see a bit of a pullback. So, guys, wait for really good high probabilities. Moving on through the GDX, and the GDX on the weekly chart also got to my projected target, which, as you can see, it's just this line from here to here. I use this from a projected, it's a pattern I could talk about later on, but my projected target was up here at 44. As you can see, it ran straight there. And so if I'm looking at my GDXJ, my projected target on the GDXJ is up at 75. So you notice how silver has already hit my projected target. GDX has already hit my projected target, but the GDXJ, it's not there yet. So I'm not saying it's going to go straight up, because nothing goes straight up. If you look at what actually happened, we see how we just broken out of this sort of triangle pattern, or this box here. We broke out. Look what happened with the GDX first. We broke out, we came down first, we had a pullback, and then ran. That's what I'm actually hoping on the GDX personally. Because if we can get that nice pullback, just like here on the GDX, and we get something like this, we're probably likely to hold and then continue rallying back up to get to the $75 level. So that's what I'm seeing through there, guys. Bit of a caution warning on gold. Gold right now is definitely overextended. I'm not saying the bull market is going to end, but just a bit of a short-term pullback. Massive bullish long-term, but short-term caution. Silver and gold, silver and gold is given a caution when it comes to that. But the GDX, I'm just hoping we get a bit of a pullback, because we're likely to get to at least a probability is we're likely to get to the $75 level. That could take a month. That could take 2 or 3 months. That may not happen at all. And that's the beauty of trading charts, guys. There's no guarantees of certainty there. And that's one of the things that I find most difficult with most of you guys that watch my videos on YouTube, is that you think because a chart pattern is formed that it's 100% certain of that's going to work out. And that's not how long-term trading works. Long-term trading works, you have a pattern. Okay, this pattern is, just say it's a projected target, just like this pattern. Here's a pattern, here's the projected target. And say, for example, 7 times out of 10, it's going to hit the target, and then 3 times it's not. So therefore, the 7 times you, just say, for example, we're trading $1,000, and we're going to make an average of 3 times 3. So 7 times $3,000. Sorry, no, 7 times 1,000. Yeah, 7 times $3,000, because it's $3,000 per trade, or $2,000 profit per trade. And then if it's a say it's a 1-to-1, just call it a 1-to-1, which it actually shouldn't be. Say it's a 3 times there. The 3 times, just say it's even a 1, you now have lost $3,000. This is how trading works, guys. So if you see this one pattern, 7 times it's not going to work, and then the 7 times it is going to work, 3 times it's not. The 7 times it is going to work, you're going to make $2,000. I'm calling this on average, guys. There's no certainties here. So if we use that, if I look at that, that's let's say 2,000 times 7 equals 14, minus the 3,000. That's 2 times 7 equals 14, minus the 3,000 here, and you're left with say $11,000. You see what I'm saying there? So that's how trading works, guys. Never think, okay, it's a breakout, it's definitely going to get to here. No, it's more of a, when this pattern happens, 3 times we're going to get this, and you're going to get stopped out. Makes sense, guys? So anyway, let me know what you think in the chat box below. Is gold over? Is gold done for at least this move here? We like it to see a pullback out of gold. Let's go back to the daily charts. I personally think we have, because we're just starting to get very, very vertical and doing a lot of price right now. And so therefore we need a little bit of time to catch up. And then yes, long-term bull market, but right now silver and gold are giving a caution. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. So you're in this brand new Go to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com. You're going to learn, firstly, you're going to get access to a brand new training that goes for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get-rich-quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go do that right now, and I'll see you on the next page.